Good day to one and all. This is Dr. Sivaraman of iknowindices.com. I'll be presenting the Asian Session Live Market Analysis webinar for this week, explaining the derived forecast from 6th to 10th of April, that is this week. But yesterday I could not present the webinar, so I am presenting it on 7th of April. So we will see the derived forecast, and later on I'll try to explain to you what is likely to happen in this particular week. This is the forecast slide. So it is the first week of April. So after the first 3 days, which was falling on last week, wherein the month of March was getting over. So the players made either way big moves in the market. And subsequently, for non-farm payroll, as expected, they made the upward move in the market. So now what is next? What they are likely to do? Now you come across in this week the important things, namely the BOE is expected to announce the interest rate, and ECB is also expected to do so with the press conference, and also the FOMC minutes are to be announced. So keeping in mind these things, the players are expected to make use of such prime data release time in order to make quick rises in the market. So from this week onwards, we will be able to see the trending move on the upside. So yesterday there was a slide as a week beginning false move. They just made the drop after the gained levels, and today they started making small gains from that of the low. They went up to the high around 230, then started making the slide, and they set the initial lows and the highs, and they are expected to make quick upward move later on. As you come across, Aussie was also making a downward stop, and after the interest rate announcement, they made about 102 pips positive net change. So they intend to gain more levels. So today is 7th of April. Swing and firm up moves are expected, and they are expected to make swing and rise move during the European session, and a small slide could be seen as a profit booking on US session. Then tomorrow also they will make a small dip and then rise as being the midweek, and then they are expected to rise during the European session and then slide during the US session. So you'll come across just opposite to that of the last week, wherein they have been making the slides during that of the European session and rise during that of the US session. But this time they are expected to make the rise during the European session and slide during that of the US session. Then on 9th, they are expected to make a dip and rise, and then swing and slide for that of the BOE and ECB interest rate decision. And then later on, they are expected to make the swing and firm up. And then you'll come across the swing and slide on 10th, that is Friday. Then they are expected to make the swing and rise during that of the European session. And then for the weekend, they are expected to make the profit booking and then continue to make the slide. So what will happen? They will gain the levels and book profit. That's what expected to happen in this week. And next week, you'll come across more quick rise are expected from 13th to 17th. When the prime data are out, they're expected to make the intentional move on the upside. So then you'll come across new highs are being shown for the recent time in the majors. So this is what expected to happen, and this is the expectations of the forecast from 6th to 10th. So from 7th to 10th you can follow, because 6th is already over. Then with regard to the levels in which they are expected to swing the market, they come up to that of 1.0919 today, and yesterday it was slightly above, and they are likely to go out to that of 1.13 level. So for 1.1018 is the high. Then in the case of GBP, 48.75 they are shown, and then 49, they are expected to go further up to 1.52 area. And in the case of USD they are likely to come down to that of 117 after forming the high 119.50 area. Then in the case of CHF, From 0.95, they are expected to go to 0.98 area as a contrarian move when euro is gaining. USD CHF is also expected to gain. Then in the case of Canadian dollar, they come up to the 1.24 from 1.28 area, and they are likely to come down another 200 pips to 1.22 level. After making brief upward swing, they are likely to come down. So you'll come across in the case of USDN and USD CAD, the USD weakening move. But in the case of USD CHF, they will be making the USD gaining move as a contrarian move. And already you find that Australian dollar, after setting the low below that of 0.76, they started gaining the level, and for the data they simply gained to 0.77 level, 106 pips they gained it. So they are likely to gain further upward move. Last week they are not gaining in the case of Aussie, but this week they are likely to gain more levels in the case of Australian dollar and also New Zealand dollar. Now, with regard to the market reading technique, we'll compare the initial lows and the highs set around 3:30 GMT to that of the current market level. So the initial low was 1.0919, they have not breached it, and 1.0955 is the current high, and the initial high was 1.0953. They just made a brief upward stop and then come down in order to gain again the levels later on. They pretend as if they are going to drop, and they are handling in the mid sessions the Aussie crosses. Because they gained 100 pips in the case of Aussie, they are holding Euro and GBP so that Aussie will be stronger when compared to that of Euro and GBP on today's strength. And as a result, you will come across that Euro Aussie and GBP Aussie are expected to react, because when Euro is weak and Aussie is stronger, then you will come across the negative net change. So, okay, Euro Aussie, which has fallen about 188 pips, and GBP Aussie also will be making similar drop. Okay. Now, afterwards, they are likely to gain levels. Then in the case of GBP, 1.4875 is the high. They have not breached it, and 1.4906 was the high. They just breached it by 4 pips and come down. A brief upward stop, and as a reaction to that of the interest rate decision in the case of Australian dollar and Aussie, and then subsequently they come down. And they only gained the levels in the case of Aussie, mainly to handle the Aussie crosses. You will be able to understand that. Now, in the case of yen, 119.44 is the low, 119.62 was the initial high. They just breached and come down. So they made a brief upward stop of 5 pips and started making the slide. And they are at the moment holding positive net change as a contrarian move in the case of yen and yen crosses, and later on they are expected to come down in the case of USD yen and gain levels in the case of 0.9559 was the initial low, and then just they made a brief downward stop into 9558 and then started gaining the level, and 9590 is the high. They are likely to breach the high and go above. So they could gain in the case of USD CHF slowly, and then later on Euro could also gain. Then Canadian dollar, 1.2467 was the initial high, and they've come down below that, and 1.2455 has become the high, and still they are holding for more than 30 minutes the market below that of the initial low 1.2467, that indicates that they wanted to make further slide in the case of Canadian dollar. So in the case of Canadian dollar, it's only 17 pips negative net change when compared to that of Australian dollar. When people go in for selling, in the case of USD CAD, just because Australian dollar has gained, they will simply hold it, absorb all the sells, hold it, and immediately those who have gone for short selling will do the short covering with a few pips loss. Then later on, they will make the slide. So this is the normal scenario, because when one data is out, when that particular currency reacts, immediately all others think that, okay, euro has not reacted, GBP has not reacted, Canadian dollar has not reacted. So we will take the corresponding positions like the US dollar weakening move. And once they take the position, the players test their patience. This is what's happening now. So after noting down the initial lows and the highs, we just watch whether the market is near that of the high or near that of the low. If it is near the high, we'll take a sell position. If it is near the low, we'll try to take a buy position. And then keep 30 pips hedge order to limit the risk. And once the position makes a profit of 25 pips, we keep stop at entry and remove the hedge order. So hedging is used instead of stop. So in a loss making position, we use the hedging order. In a profit making position, we use the trailing stop. And then try to gain profit by using that stop as a trailing stop, and also a trailing limit order, take profit order. As a result, when the market goes up, both the orders will go up. When the market reverses suddenly, either the trailing stop or the trailing limit order will get filled. That way we'll be able to protect our profit. Normally, in a good momentum market wherein they made the spread between the high and the low for more than 40 pips, during the Japanese session, we should be able to see that 75 pips profit we can earn in such trades. Otherwise, if the market is subdued, then probably about 30 to 45 pips we should be able to earn it. Then, after that of the daylight saving system is on in the case of Europe and US. These are all the market timings. So Japanese session gets over by 7 GMT. 7 to 7:30 is the gap time before the start of the European session, which starts by 7:30 GMT. 7:30 to 9 will be the early European session. Then US session starts by 13:30 GMT. So as I explained that they only handle two pairs at a given time. So watch those two pairs which have made more than 40 pips spread at a given time. Then watch that they are the prime currencies they wanted to handle to start with. Then later on they will shift to other currencies. Each time they will handle two currencies at a time. So if you watch carefully, you will be able to take positions in those currencies and you will be able to really see nice profit. So I will try to answer the questions which are asked in the question answer window and also chat window. Then Jen Sora has got a question. Do you see cable holding above 1.48 and so we can one hold and long position about 1.4840? Yes, you can hold it. They are likely to hold it above that of 1.4875. If you got any other question, you can ask me. I'll be able to answer to those questions. Okay, any other question, please, so that I'll answer to those questions. Sorry for the delayed start. I had a call, so I had to attend it. So if you don't have any question, I'll just review the forecast again. Okay, there are questions coming up. Then Ini has got a question about taking position in currency having 40-45 pip spread. Does it apply to crosses or majors? So as far as the crosses are concerned, I explained that the spread should be more than 70 pips in order to initiate a position. And crosses of commodities, any cross is 70 pips and the majors 40 pips. Spread should be there between high and low. Then we can initiate the position. So do you expect Euro session cable going back to 1.4875? No, 1.4875 is a mathematically derived level. They are likely to touch that or may come close to that. Not exactly 1.4875 in reverse. They are likely to come closer to that. Or sometimes they can make a brief downward stop. And also, it all depends upon where the cluster of stops are. So you and I will not be able to decide. Only the players can decide and the stops can decide. A cluster of stops there should be. Not a single stop so that the players will take all the effort to hit it. If there are cluster of stops, then if they hit, they will be able to make very good buy at the lowest level. Then they will make an attempt to hit it. Then Oren, they will form up before slide in this session. Yeah, they are likely to make the small form up. Then should we be looking to take profit before the year session? You can do that, or you can keep stop at entry. And if you want, you can do position trade from second week, first week onwards. Whenever you find that month beginning trend reversal is over, the trending move is likely to happen. So at that time, you can take position trade. Otherwise, you can always do swing trade. That will be the best. Swing trade, you will continue to enter and exit, continue to enter and exit, so that there is no question of the greed influencing you at any time. Because out of greed, we try to maximize the profit without a trailing stop, and they might show the maximum profit, but reverse, and we might miss booking profit. So in the event, if you are holding a position for a position trade, use the trailing stop so that you are assured of the profit. Then Jen, I would like to buy cable, but at what level could we buy it? So cable, you can buy it closer to the low. So once they come below, see, normally what happens during that of the session start time, they will try to make some pretending moves. So they might go below that of the psychological level 1.49. Once they come down and see for 30 minutes from 7:30 to 8, if you're smart enough, you can watch for 10 minutes and understand, okay, they are not going to breach the low. Then in that case, you can take a buy there. Even slightly higher is not a big deal as long as you have the hedge order. Suppose you buy it at 1.4910 and keep the hedge order at 1.4880 or 1.4900 and the hedge order at 1.4870. It doesn't make a difference because you will only block 30 pips. And then in the event, if it is hedged, you can watch for 10 to 30 minutes. And if the hedging is not making profit in 10 minutes, you can close and keep another hedge order 5-10 pips below. And once they move in your favor, start trailing the hedge order on the upside. So you can fine tune your entry by keeping 10 pips below that of the market, the buy order. And always keep in mind that if you are using the hedging, you are taking a risk only for 30 pips at any given time. Even if they hedge you, it doesn't matter. You can keep a stop at the entry in the hedge and stop it out. And once they start moving in your favor. So understand the trading strategy is vital. So if you use the trading strategy, you find that your fear is going off. And you find that you are in a position to earn consistently from that of the market. Nobody can stop it. You will be able to earn. But provided you have to get rid of the market fear. Then Aditya, what are the ways to find out which pair will be handled in sequence, looking at the quote page? See, as I explained that in the quote page, wherever you come across the spread is more than 40 pips. No, in the case of euro, it is not. In the case of GBP, it's not. It is not in the case of yen also, GBP also. Here again, no 40 pips. And Canadian dollar is also less. Only Australian dollar, they are focused. All the other currencies, they are holding it. That indicates that they wanted to handle the Aussie crosses to start with. So there you will be able to see that the spread between the high and the low will be more than 70 pips. Then they will come to that of the other pairs because they are holding all other pairs without making much of a move. And that is why they are in less than 40 pips. Then later on you watch during the day, they will make in two pair, they spread more than 40 pips. Probably in the case of yen, they will make one downward move. And then that will make 40 pips. Or in the case of euro or GBP, it depends upon where the traders have taken positions. So we will not be able to say where they are going to make the move. But once they make the 40 pips move, that currency they will focus for sure. And you would have noticed during that of the interest rate decision time, they made a quick downward move below that of 0.76 and quickly made a brief downward stop and then started gaining the levels. So always before the data, they will make the false move. That gives the greatest understanding for you. So when they are making a downward false move before the data release, so how they will know the data, one thing, why they should drop it or make a stop, and that is quick move. So you understand that they just only hit the stops before the data is out, and then after the data is out, they just make an upward move. Suppose in the event the interest rate decision is not a very positive one to that of Australian dollar, still they will make a rise. There comes the difference. Once they are done the downward stop and before the data release, understand whether the data is positive or negative, they will try to gain upward after the false move. So that is why you come across that sometime the data might be negative to US dollar, but still they might make the US dollar gaining move. Or it might be positive to that of the US dollar, still they will rise euro and GBP and simply say that risk appetite. So they can use any interpretation. So if you understand the type of moves, then it is very easy for you to take positions and exit with profit. Then Saran, Oren has got a question. What time can I start a trade today? Normally, what you do is you note down the initial lows and the highs, and when they are closer to high and not breach the high for more than 10 minutes, take a sell, and they will make a small dip. You can book profit. And after 3:30, if you start entering into the market, and also when the spread is more than 40 pips, you enter into those currencies, you'll be able to make quick profit. Otherwise, to be on the safe side, you can wait till the start of the European session. And when they make a small dip during start of the European session, try to take a buy. Then during that of the late European session, they will rise. You can book profit. Okay. Then if hedged two times, then what can I do? Okay. Suppose you keep 30 pips hedge order and they hedge you, and then you find that the hedging is not making profit for 30 minutes, you close your hedge order and keep another 20 pips hedge order or 15 pips hedge order as a tight hedge order because you don't have adequate equity. Then they hedge you again. Then afterwards, the hedging is not making profit for 30 minutes, you close it and or close it with stop at entry and keep another hedge order even 10-15 pips away. As long as the hedging is not making profit for 30 minutes, you have to close it because suddenly they will reverse it and you should not get caught with the hedge at the lowest level. It becomes a bad trade. say when the market is likely to come back again below that, then you have to hold it. Then you require my help, the forecast. When there is going to be another downward move, at that time you can keep stop at entry and then continue your trade. If it is hedged, that is advantage. Suppose if it is hedged and the market has moved against your hedge, and it doesn't matter. Then next, when they are going to make a dip, you can wait for the time and they will come below that of the hedged level. At that time, book profit in the hedge, and then later on, they will make a rise in the next session. At that time, you can book profit on the buy side also. Only thing is the platform will charge overnight interest in that case. And once the position is hedged, the overnight interest rate will be very minimal. Then Money has got a question. Can we be able to correlate Euro USD movement with copper gold? No correlation is there, sir, in the market. Actually, it appears that sometime there will be correlations, but suddenly they will change it. And in what way you can depend on it? After you taking the position, thinking that there is a perfect correlation, if they just make a non-correlated move, what will happen? So because many people will talk about the correlations, for you to easily identify and take positions, 1 or 2 times you might be able to book profit. Suppose euro is going up, gold might also go up, they will say, and you will be tempted to take a position. And 1 or 2 times you might book profit. And the third time you'll find euro might be dropping. Then they will say that is a safe haven strategy that everybody is buying gold and they will start rising gold. Then there won't be any correlation at all, or a reverse correlation might be seen. So never compare currencies or commodities and try to take position based on that, because the strength and weaknesses of the currency depends upon the longs and short built up in the market. So if there are more long positions in the case of euro when compared to that of GBP, then they are likely to gain more in the case of GBP. In the event if they want to rise euro, what will happen is, suppose traders have taken long, plenty of traders have taken long position and nobody is holding sell position. Then what the players will do, they will try to make a firm up of 10 to 15 pips. Then the people will holding long position will think that, okay, we are comfortable, they are rising. Then suddenly they will come down and hit the stops below and then start going up. Because they have all the tricks in their hand and bank terminals are in their hand. So they can easily make such stop and then start rising with the least selling pressure from that of the traders, because the traders would have stopped out. Then Monal, stop entry should be used for hedging as well. Yes. Wherever you are taking the position, if the position is making profit of 10, 15 pips or 25 pips, keep stop at entry. So that, if it is hit, you can keep another hedge order and limit the risk. If I would use it, the moment I would get hedge and use stop at entry, I would stop loss and still incur a loss. Now, as far as the stop at entry is concerned, I explained to you, once you are hedged, you wait minimum 10 minutes and then keep stop at entry or close it manually. Minimum of 10 minutes. Then you will be able to perceive what they are trying to do. If you immediately close it, then you find that you are hedged again. You require patience for that. Keep the physical clock and see that you are forcibly waiting. Otherwise, look at the GMT time, wait for the 10 minutes, and afterwards act on the position, hedge. Then New Zealand dollar or any New Zealand dollar cross, do not analyze any of these for the Asian session. See, normally what I do is I do only with regard to the 4 majors and 2 commodity pairs, not New Zealand dollar. Because New Zealand dollar, the players make move locally, not in tandem with that of the international market. I do not want to go into the details of it. That's why you come across more whips or moves there. And so predicting New Zealand dollar and their crosses require a separate understanding. So it is beyond the scope of this webinar. And also, I do not want small traders to focus on such currencies which are virulent, which are very aggressive. And when you have very less equity and focus on such currencies, then you are likely to lose your account as quickly as possible. So you come to the market in order to earn. So for that, you have to enter into a currency wherein the move might be of a lesser magnitude, but still it will be safe. And they will not make any big whips or moves. That is why the safest currency to trade with will be euro. And later on, GBP. GBP again, they can make whips or moves. And also yen, you require a special skill set to understand the whips or moves. And CHF appears like a subdued currency, suddenly it will become very aggressive. So the behavior of the currency changes from time to time. You need to understand how the players are doing it. For that, you need to necessarily develop the habit of watching the net change in these currencies and make correlations, whether the positive currencies or making the positive, numerator currencies are making positive net change, denominator currencies making negative net change, and things like that. Or whether it's a contrarian move, then only you will be able to take appropriate trading decision. That will be more accurate. Then, is it just that you are not expecting anything from these in the near future? I was explaining that US dollar weakening moves are expected in this market. What will be the expected direction of GBP Australian dollar? GBP Australian dollar, they will gain again the levels because they are going to gain levels in the case of GBP after gaining levels in the case of Australian dollar. Both are numerator currencies. Is the London session considered as GMT plus 1 hour? Yeah, the daylight saving system is on. Now this shows the New York time. So add 4 hours to that. So it is 5:40 GMT now. See? Add 4 hours to that. It's 5:40 GMT. Since you are following it in GMT, there is no daylight saving system in that. GMT is a 24-hour cycle. Only thing is you will find the start of the London session from 7:30 or 7:30 GMT, the European session start. That's how it is. Then RN. Aussie is good to sell in Japanese? No, sir. I will not recommend sell and buy just because of they gained 110 pips. If you try to sell, you might be holding it. They sell. The players are privileged to book profit, and what they do is they just only dip 5 pips or 10 pips and buy back again and gain another 150 pips or so, and then only they book the profit. So first gain, if you try to sell, you might be disappointed. The second gain also you might be disappointed, as you know that they don't make hat trick. The third gain will be a pretension. Then they will drop. Watch that. You listen to all my webinars, what I have given it as my trading system, then you will be able to understand well, which is listed in fxtrade.net under my profile. So if the hedge is making profit, then one has to hold both the position till it stops cutting a new high low. Yeah, you can hold it. Otherwise, you can book profit in the hedge and keep another hedge order and then try to book profit on the buy side as well. Yes, you can close the hedge, and these are all the various trading strategies you can follow. I explained in detail my trading system, the various type of trading strategies. Now it is 6:30 London time, but it is 5:30 GMT. So the London session is based from GMT plus 1, meaning it means the London start time. 8 a.m. and not GMT 8 a.m. Is that correct? Okay. Now, as far as you are talking in terms of London session, I'm talking in terms of European session. So 8 GMT, the London session might start, but the European session starts by 7:30 GMT. So what is more important is when the players are going to make some false move is important. During the session start time, they will be making a quick downward move as a pretension, as if the market is going to fall, then suddenly start gaining the level. So always keep in mind, if the person needs to cheat you, he will pretend to start with. And if a person wants to cheat you, he will pretend as if he is a very good friend of you, even though he is only an acquaintance or a stranger. He will pretend as if he has got all the philanthropic ideas of supporting you. Then in 30 minutes, you will find that your purse is being lifted. Simple. So that is how they do it. And so that is the only way in the financial market. If somebody wants to earn money without any effort, and normally what we do is we convert the money into effort. We convert it into effort or some business or whatever it is. Then that effort gives you the money of a higher degree. Suppose you put $100, then it gives you $110, and then the $10 becomes your profit. The principal will be $100. But if you want $100 to become $200, then you have to cheat somebody. That's what they are doing it in the market. Okay. Then Jen, Dr. Please, is the European Frankfurt session 7:30 GMT and the London session? Sir, let me tell you honestly, there is, even though in the market people talk about the Frankfurt session and the London session, ultimately what is important is when the players are making the session start move. So between 7:30 to 8, they make the session start move, irrespective of Frankfurt starting and the London starting. Actually, you find that they make the quick false move during or the stop and during between 7:30 and 8 GMT, and then start reversing the market. See, ultimately, you know that the market makes quick moves. Otherwise, it makes only subdued moves. It makes quick moves only during that of the session start time and during the data release time. See, now you have seen during the data release in the case of Australian dollar, which has gained. Then afterwards, what happened? They are simply holding high. That's all. So if you think that Australian dollar will continue to react, that is your wrong impression. So they have to make it natural. For that, they are waiting for the data release time. So don't confuse yourself with that of the London session and the Frankfurt sessions, etc. They are all mainly given to you as a misguidance so that you lose. So they give all the informations, including the chart study, mainly for you to lose. If the chart study is really going to help anybody to make money, then I do recommend charts. But unfortunately, of the 100 traders, 95% of the traders, they use the charts and lose money. Then range trade for the majors of this week. No, they are expected to make the swing and gain moves in the market. Okay, I think I have taken more time. So this is the expected market move for this week. And then also the range in which the currencies are expected to make the moves also listed here. This webinar is being recorded. So if you have missed it, noting down, you can also listen to that or view the webinar again and try to make a note of it. So this Thursday, I got some other appointment, so I'll not be able to do the review of the forecast, what I've given it. But 13th, I'll come back and give you the forecast next Monday, what is expected to happen next week. So I take this opportunity to thank FX Trade for the facilities given to present the webinar, and also those you have attended the webinar in order to enrich your understanding of the knowledge pertaining to understanding of the market. Thank you one and all. Wish you all happy trading. See you next week.